Have you ever stopped to think about, what really goes into a huge project or some really complex thing people are trying to pull off? It's almost never just the end result you see, is it? There's all this strategy, the careful planning, getting exactly the right team together. In finance, especially when we're talking about making sure financial reports are accurate and well transparent, there's this strategic blueprint. It's called audit planning, and believe me, it's way more than just crunching numbers. So today, we're going to dive deep into that really, really crucial first step, the overall audit strategy. This is like the foundation. It sets everything up for an audit that's actually effective and hopefully efficient too. We're using some pretty comprehensive resources here to give you a bit of a shortcut to understanding this vital part of the financial world that often goes unseen. Before we dive deeper, just a quick reminder that this deep dive is based on material from Farhat lectures. All the content, examples, explanations, everything we talk about today, it's derived from the comprehensive accounting resources over at farhatlectures.com. So whether you're maybe an accounting student studying for the CPA exam or already a professional, you can visit the website for more practice questions, video lectures, and detailed support to really nail down today's topic. A special thanks to Professor Farhat for providing this really valuable material.
Yeah, and what's really fascinating about this stage is just how much thinking, how much um, real consideration goes into the why and the how, before they even really start digging into the what's of the audit itself. It's this foundational bit that basically directs everything else.
Okay, let's unpack that a little then. This overall audit strategy, what exactly is it and why is it so critical right at the planning stage?
Well, by the time auditors get to this strategic planning part, they're not coming in completely fresh. They've already done their homework. They've spent time understanding the client's business, the industry they're in, even what motivates the company's management. So with that background, the strategy becomes the sort of initial blueprint, the master plan that guides the whole audit engagement. And this blueprint really lays out three core things. First is the scope. What exactly are we auditing? Is it the full set of financial statements? Maybe just specific accounts? That needs to be clear. Second, there's timing. When is the audit work actually going to happen? Is it spread out, concentrated at year end? A mix, things like regulatory deadlines, or if it's a seasonal business, even when shareholder meetings are scheduled, that all plays a role.
Yeah.
And third, the direction. So how are we going to do the audit? What's the overall approach, the methodology?
Right. So scope, timing, direction, these aren't just fuzzy ideas then. They're the actual building blocks for the detailed audit plan that comes next. Like you said, the blueprint.
Exactly. It's the concrete framework.
So thinking beyond just the what, when, and how, what other sort of practical things do auditors have to factor into the strategic planning?
Oh, the practical side is huge. It directly hits the resources you need, people, budget, everything. Like auditors have to look at how many sites a client has. Is it one office? Or maybe, multiple locations, maybe even international ones. That completely changes the budgeting, the logistics. It's a big deal.
I can imagine. Coordinating across different places must be complex.
Definitely. And another massive factor is how reliable the client's internal controls have been historically. If their systems are strong, if they've proven trustworthy over time, well, that really influences what we call the nature, timing, and extent, the NTE of the audit procedures. Basically, it tells us how much testing we need to do, when we need to do it, and whether we can actually rely on the client's own controls to some extent. If those controls seem weak or unreliable, then the auditors have a lot more heavy lifting to do themselves, more detailed testing.
Okay, that makes sense. And that brings up the people side of things, right?
Yeah.
All this planning, these considerations. It takes a team. So who are the people actually doing this? What kind of team does it take to pull off a detailed audit?
Yeah, the standards are pretty specific here. The audit staff, they have to be proficient, knowledgeable, experienced, basically suitable for the job. They need the right skills and expertise for that particular client, that particular industry. You can't just throw anyone at it.
So a team makeup must vary quite a bit.
Oh, absolutely.
Yeah.
It varies wildly. For, say, a large publicly traded company, maybe a global corporation, you could have multiple partners involved, different levels of staff, seniors, managers, maybe teams from different offices, even international offices coordinating. A huge team sometimes. But then for a smaller audit, like a local nonprofit, maybe it's just one person doing the whole thing. Or like a condominium association audit I worked on once. It was just me and two others. So it really scales with the size and complexity of the client.
That's interesting. And the source material mentions something called continuity of staff. Why is that considered so important? Having the same people on the audit year after year.
Continuity. Yeah, that's actually really beneficial. Think about it. The first year a team audits a new client, there's a big learning curve,
Hmm.
right? They're effective, they get the job done, but maybe not super efficient because they're still figuring things out.
Learning the ropes.
Exactly. But by year 2, that same team, they're way more effective and more efficient. They know the client, the systems, the potential pitfalls. Year 3 and onwards, that efficiency and effectiveness just keeps getting better. So continuity helps the firm and the staff stay really sharp technically for that specific client. Plus, you build better working relationships, always maintaining independence, of course. And from a personal career angle, a staff person who stays on an engagement for several years can become incredibly knowledgeable, maybe the most seasoned non-partner on that job. It's about embracing assignments, learning, growing, kind of acting like an entrepreneur within your own career path.
That makes a lot of sense. But what happens when even a really experienced team runs into something, well, really specialized, something outside their normal accounting expertise? That brings us to specialists, right? What exactly is a specialist in this audit context, and when does a firm decide they need one?
Right. A specialist is essentially someone who brings deep, specific knowledge in a field other than accounting or auditing, knowledge that the audit firm itself might not have in-house. And this expertise is needed to properly evaluate something on the client's financial statements.
Can you give some examples? What kind of specialists are we talking about?
Sure. The source gives some great examples. Like if you're auditing a big construction company, you might need an engineer, someone who can properly assess the progress on a building project, which affects how revenue is recognized. Or imagine auditing a company that deals in valuable gems. You'd likely need a diamond expert, right? To verify the authenticity and value of the inventory. Insurance companies, they almost always require actuaries to evaluate their complex insurance loss reserves. That's highly specialized math. You might need lawyers for interpreting really complex legal contracts. Or with fair value accounting being so important now.
That's valuing things at their current market price, basically.
Exactly. And it often involves complex models and assumptions. So you might need a business valuation expert. And these specialists, they could be someone who works for the client or an independent consultant the client hires, or someone the audit firm hires specifically for the engagement.
Okay, that's clear. But here's what I'm wondering. If the auditor uses a specialist, does that mean the auditor is, like, less responsible? Who's ultimately on the hook for the audit opinion?
That's a really critical point. No, using a specialist does not reduce the auditor's overall responsibility. The buck absolutely stops with the auditor. The auditor first has to understand the client's business well enough to even know if a specialist is needed. That takes judgment. Then they have to assess the specialist's qualifications, their competence, their objectivity. They need to understand what the specialist is doing, the scope of their work, and evaluate if their findings are reasonable. And crucially, they must ensure the specialist is independent from the client where necessary. But the final audit opinion, that rests solely with the auditor. The auditor takes full responsibility. Actually, the only time a specialist is even mentioned in the audit report is if their work directly leads to a modification of the standard audit opinion, like a qualified opinion or an adverse opinion. Otherwise, their contribution happens behind the scenes, supporting the auditor's work.
Wow, okay. So the ultimate responsibility stays firmly with the auditor. That's key. So wrapping this up, it's clear that audit planning isn't just some administrative task. It's this incredibly complex, strategic process. It's not just about the financial statements themselves, but really thinking through the resources, the timing, and knowing when to bring in that specialized expertise. So what does this mean for you listening? Well, next time you hear about an audit, or maybe even when you're tackling a big project yourself, remember that hidden layer, that invisible blueprint of strategy. And think about the diverse teams, sometimes with very specialized skills, working behind the scenes to make sure things are done right. It really highlights the importance of thorough preparation.
Yeah, and maybe think about this. Consider any complex field you're interested in. It doesn't have to be finance. What kind of maybe unexpected specialist might be absolutely crucial to really getting under the hood and understanding its intricacies? It underlines the idea that real expertise often involves knowing what you don't know and knowing when and how to bring in outside knowledge effectively.
That's a great thought to end on. And if you do want to explore audit planning and accounting further, remember, as our source material suggests, you can check out multiple choice questions specifically on audit planning over at farhatlectures.com. We hope this deep dive gave you some valuable insights today. Until next time, keep digging deeper.